to you live on YorbaMedia.com. All right, it's my esteemed pleasure to bring back Nick Santiago, President and CEO of In the Money Stocks. Nick, welcome back to the show.
Great to be back with you, Michael. Thank you for having me.
My pleasure. Okay, which one of these markets you want to start off with today?
Well, let's start off with Apple.
Okay.
Fine. Basically, I've been putting out a little warning sign for a lot of your listeners, also my members. Today's Apple is getting a really nice snapback rally, but I think traders got to watch this one. This thing still looks very vulnerable. Although it's having a nice rebound today, I still am in the camp that Apple wants to trade lower before it trades significantly higher. So I would suspect Apple's going to trade down to that 336 area first before it gets back up to new highs. Around 336, I think the stock has a lot of support in the short term. If it breaks through that level with any real conviction, I think then Apple really could be really in trouble to go and could go a lot lower. So then I think the stock is vulnerable down to about the 500 level. But right now it's rebounding. I think traders got to watch how this thing trades out the next couple of days. And we'll see how this thing plays out when it does get down to that 336 area.
Okay, you're saying 336. It's at 680.
636.
Oh, 636. Okay.
Yeah.
All right. Now, it's got a little rally going on today, so do you have any resistance levels you're looking at?
Well, you got a big gap up here, probably around the 693 level, but even at 680, the stock has a fair amount of resistance. I know it's in that area now, so we're going to have to see how this thing reacts around this level. Even 688, there's going to be a fair amount of resistance. I'd like to see how it reacts around that level, but I think 688 is going to be near-term resistance for this thing.
Okay.
Another $8 higher.
Okay, got it. All right, that's enough time for everybody to get ready to short this thing or write calls against their long stock. Got it. What's next?
Well, I think overall I want to talk about the S&P 500, and the one reason is that last time we spoke, I said, the Fed is in pretty good control of this thing, and today you're getting a nice little rebound. You'll notice that yesterday the market basically came down to its breakout area before Ben Bernanke, right when Ben Bernanke, I should say, announced QE Infinity. So you're finding some support, but I think the market is still a little bit on the weaker side. I don't think the short side is going to be all that easy, as we have a ton of support really around the 1390, 1395 level on the S&P 500. But that would be an attractive level on the S&P to play for a bounce if it does get down there.
Just below 1,400, get everybody faked out. Got it.
Yep.
All right. Overall, though, do you see that if we hold that support, 1390 support, that going into the middle of, say, next month, do you think that we would be experiencing, chances are, a rally into elections?
Yes. What I'm thinking right now is I wouldn't be surprised to see the market weak into elections. There's a lot of uncertainty, but after the election, I would be more so leaning towards another big move or a big advance. If we rally up into the elections, look for an election decline.
Got it. Do you have any time cycles coming up close relative to the support level you're talking about?
I do. Right around November 7th is a key pivotal date for me. So, we often get a cycle date around that area, and this year we do have one as well. So I think you're going to watch that November 7th area for a pivot.
That's a Wednesday, the day after voting day.
That's right.
Okay, so you think we may, if we run lower into it, that's not going to favor the incumbent?
Well, I think if the market sells off, I really have a hard time seeing the incumbent lose, to be honest. Just the way this country is at the current shape that it's in, and so many people depending on the government. I don't really know if the presidents really matter. I'd like to, obviously see Romney win, so my taxes would be lower. But it's going to be tough right now. Ben Bernanke may have handed this president the election already.
Yeah, we got that one on when we started to see these big jumps. All right, here's the question I've got for you. TLT, the stock, or the bond market, we've got a rally that failed today, and I wanted to get your impression on that. Do you think this is the a turnaround point for further downside in the price of bonds?
Well, it could be. I actually penciled in the TLT to make its way up to around the 127, 126.75 level. That's what I've told my subscribers. So I don't really see this thing getting much above there. Right now we could be getting a pullback to make another move up into the 127 level. But I really have a hard time seeing this thing get much above 127 right now.
On the next leg down, do you see that we would have big money moving out of the stock market, or excuse me, the bond market, and then putting it into the stock market?
I do think that is very possible now. There's a very more than average chance that that's going to happen. You actually seen money come out of the bond market already and have gone into the stock market. Now money's coming. You've seen the bond market get a little bit of a bid, but I don't think going forward that the bond market or the TLT is going to just collapse. I still think even if it does sell off around the 115 area, there's just a ton of support. And even a little bit lower around 112, you have a ton of support. So I do think that there are a lot of support levels. I don't think this bond market is just going to burst like the other bubbles that we've had. In fact, I don't even think the bond market is a bubble because the central bankers are continuing to buy all of these bonds, and as long as they stay in the business and they continue to do this, really the bond market is somewhat of a play. And I think traders out there can just continue to play this thing for the bounces, and that's the best way to approach it at this stage of the game.
Got it. So this bond market may be more managed than most people think. No panic. It's a manage.
There's no panic, and it's definitely managed.
Got it. All right. You always talk about copper or metals, and give me your feelings on those.
Well, I think that the base metals and copper is still suspect to pull back. I was looking for a final low in this cycle to be around the late October, early November time frame. QE may have put a monkey wrench in my plans there. So I would actually be looking at stocks like Freeport-McMoRan now to buy them, on the next big pullback. But say a stock like Freeport-McMoRan, which is predominantly copper, a little bit of gold, I would get interested in that around the $34, $35 level, but not really before that.
Okay. Longer, do you see this as a legacy play, the Freeport-McMoRan, or only to a certain point?
No. You just, as long as the inflation is being created by the central bankers, and Shanghai had a big move last night. I think the base metals acted very well yesterday, telling us that China was about to do something. It's going to be temporary. This is all of this is temporary. The bear market, even though it looks to be over at the moment, it'll come back and rear its head again. So I think that for the remainder of 2012, we can't really get bearish on these anymore. We could be buyers on pullbacks, but at some stage in 2013, we'd get bearish on them again.
Okay, how about the metals?
Basically the same thing. If you look at gold, gold has held up like a rock lately. Even gold miners are doing very, very well. Gold itself, the GLD is doing well. I mean, you just can't get bearish on this sector right now at all.
Okay. In regards to that, are you looking to, are you long now? Are you looking to get long down the road?
I am not long in gold right now, but around the 160 area, I will be.
Okay.
On GLD.
Got it. GLD long. This Freeport-McMoRan, getting back to it, I just looked at it. It had a really nice pullback. You got a little rally off of that spike low from yesterday, $40. What are you thinking? Over 43 this time?
Well, I think it's going to pull back again. I think we're getting a little short-term bounce here, but I do think this thing can come back to the 35 or 34 level. I think that's where traders should look to own it. But then after that, it has upside to 45, sure.
All right. Now, I've got a cycle low for the stock market. My work says that, October 11th, and that's, right in the middle of October. Do you have anything around there, or am I out there by myself on this one?
I think that is an important date. If you go back to 2008, you'll notice that was a big pivot. 2007, October 11th was the high in the market. That marked the all-time high for the S&P 500. So I do think October 10th is always a pivotal date, 10th or 11th. So I think you're onto something there.
Okay, thanks. What other markets did you want to bring out before we sign off?
Well, I just wanted to say one thing, that I think the central bankers have this really are controlling this right now. I don't think that the institutional money that is moving the markets are really showing us any real signs of fear. So I think the traders want to watch for, basing patterns right now. And when we come into important time cycles and we see how the market comes into big support areas, I think the market can be bought. And that's something that traders should look for and start to really just look at these basing patterns that are forming at this time.
Good point. Good point. Now they can do that in your trading room. You've got something going on this week. Is that right?
This week we have a live seminar going on the entire week. We're doing live trading. We're also doing advanced cycle webinars and small cap webinars and many other teaching seminars. So it's a live event, and it starts at 8 in the morning, and it really lasts until 5, 6 o'clock every night. We're doing it live here in Tampa, and so far it's been just a great event.
Great. I'm really happy that you're having some success with that. Give our audience a way to get into that room since it's running all week.
Sure. Come on over to inthemoneystocks.com. We offer a 7-day free trial to our chat room. You could see our desktop live. You could ask us questions throughout the day and see everything that we're doing. And also come to our research center. You'll get all of our swing trade setups, all of our cycle work, get all of our nightly videos and everything that we're looking at. Take a 7-day free trial. You have nothing to lose.
All right. Thanks, Nick. I appreciate that. I'll let you get back to it.
Thank you, Michael. Have a great day.
My pleasure. Nick Santiago, President and CEO of In the Money Stocks. They've got a running webinar all week, inthemoneystocks.com. Check it out. I get so many cards, letters, emails about this guy. You've got to see what he's doing. He's very, very good at it.